multifamily, you really do need a team.
I agree. I mean, I looked at the due diligence checklist for multifamily, like when we're underwriting these things. And all I can say is thank God that I'm not the underwriter. I am a sales guy as well. I stick to like talking to the brokers, sellers, and investors. So, for you, I want you to do me a favor. Sell me your pitch.
So your
Like,
pitch, oh shit.
What's up, Brenda? What's going on?
I'm great. Thanks for having me. How are you?
I'm good. I'm good. It's the middle of the week, and I'm kind of glad it's hump day, right?
It's almost Thanksgiving. I'm going to
That's what I
Maui
was
with my
saying.
family.
Oh, really?
Yeah, it's our annual like family vacation. I'm very excited.
Dude, that's groovy. I've never been to Hawaii, actually.
We've been every year for the last like 6 years. It's paradise, honestly.
Cool. Well, thanks for not inviting me.
Next year.
All right. Well, let's get into it. I'm super excited to have this episode because you're doing all these cool things, and I want to hear all about it. And so, can you kind of tell the audience who you are, what you're doing, and then we can kind of go from there?
Yeah, sure. So I am Brenda Jones. I'm out of Southern California. I do a lot of things. Am still in W-2. I work for Apple. I'm a recruiter. I've been in recruiting sales for the last 18 years. And I got into real estate investing about a year and a half ago. And like most people in this kind of small circle that we're in, I started because of Pace Morby and Sub 2. The exact reasoning of how I got into that was I was Googling how to save on taxes because I live in California and I'm a high W-2, person, and all my money goes to the government and it sucks, right? I don't own a home. I don't have a business. And the more I work, the more I make and the more they take. So I came across Pace and joined Sub 2 a few months later and, thought that my real estate investing goals was going to be have a couple Airbnbs in Vegas. Like people think it's so funny. I was like, yeah, a couple Airbnbs, fly out my girlfriends. We got a free place to live and all that. And, fast forward, I got to go to this amazing event called Community Camp, which this was last year, not this year,
Oh, okay. Yeah,
2023.
yeah, yeah.
And that's where I found out my superpowers of like sales, networking, building rapport. And it was brought to my attention that like, hey, why don't you raise capital? Like that's exactly the skill set, And then it was like, okay, well, why don't you focus on multifamily? Because that's the best way to scale, right? Like it takes the same amount of work to try to buy a 50 unit as a, single family home, right? I'm sure obviously there's, caveats, but I was like, okay, perfect. Cause I'm 43 and, I don't have enough time to, be wasting, right? So I was like, I wanted to get to my destination as quickly as possible. On top of that, I'm one of the leaders of OCJV, which is a local Orange County real estate investing community. I helped grow that from 11 people to now 1,200 people. And we've got a monthly
Dang.
meetup. Yeah, it's pretty cool. I'm very proud of it. And, there's other meetups in SoCal, but we continue to be like the one that everyone really enjoys and comes to on a regular cadence. So yeah, I'm really proud of that. I am married and I have a 4-year-old too. So I do all the things.
Holy cow. So what I got out of this was you're a super mom.
Yes,
Like, holy
absolutely.
cow. Okay. So the way you're talking is like did you just join the community like last year?
I just joined Sub 2, yeah, April of 2023. So again, like a year and a half.
Oh my gosh. And you had no real estate experience prior to that?
No, don't even own my own home. And now I don't even have a desire to because, through this process as an entrepreneur, you learn that you don't want to spend your active income, right? You want to spend your passive income. So now I just want to buy as many rentals as I can and as many apartment complexes, RV parks, boutique hotels. And then maybe down the line, like I'll buy a house, but like that's no longer my first gen immigrant like goal, right? Because like that's what my parents wanted, right? Get good
Yeah.
grades, go to college, get a good job, buy a house. Like that's the only 4 things you need to achieve to be a success in an Asian family, right?
Yeah. Trust me.
Yeah. You know all about it.
The first time I asked my parents, or I didn't ask them, but I was like, hey, I'm going to flip this like crack house. You know what I'm saying?
They're like, oh, hell
And,
no.
and, and they're like, no, why are
Yeah.
you doing that? You know,
Yeah.
but
Exactly.
so year and a half, you
Yep.
had no real estate experience. You joined the community. You figure out that you're a sales master. You're raising capital. What does your portfolio look like now?
Yeah, so I started with investing in funds with Pace, Vina, and then also Rich Summers. He does boutique hotels. So because I'm a W-2, right? Like I don't have much time. And this is what I try to teach on my social media is that the best way to get into real estate investing is passive. And that was also my foot in the door to learn the process, right? So most W-2 people don't want to quit their job and like start a whole new business. But that is my goals eventually. Like my tagline on my social media is, my journey to retire before I'm 53. So I'm giving myself 10 years to retire from my W-2. But in all honesty, it's probably going to be sooner than that, right? So right now, like I have a team, we started a multifamily fund and we're currently looking for, deals to put under contract. To be honest, the last 10 months has been really difficult for multifamily. Nothing's been underwriting, right? Obviously, interest rates don't help. And, sellers are still delusional, thinking they're going to get 2, 3x the value of their property. So the last couple months, we've partnered with another team to source for RV parks, and those returns are looking very sexy. So, for example, it's like I think it's a cash on cash of like 15 to 20%, and like an IRR up to like 30%. So,
Yeah,
we've got a bunch of
they're
LOIs
cash
out.
machines.
Yeah, yeah. So hopefully we have something soon. So very excited about that.
Okay, so okay, you mentioned that you have a fund, so you have a active fund right now.
So yes, the fund is alive, but we have only soft raised because again, we don't have a deal under contract. So we can't take money and just be holding onto it, right? So these are the things that like, you know, see things on social media, right? And the honest truth is this shit takes time, right? It
Oh my
doesn't happen
gosh.
overnight. There are not many good deals, right? And the work you have to put into to find a good deal is months, is years, right? So this is definitely a long game for me, especially like being in multifamily, right? Like, you could probably get a house under contract pretty quickly, but that's one house, right? We're trying to get, 50 to 150 units or like an RV park that has 75 pads, right? So
Yeah.
it takes time.
Yeah, I love that you say that because obviously, for me, I was this big single family guy. Like I was like, off the market, doing a bunch of transactions off the market, and we're actually selling three of our single families because we just don't want to deal with it no more. Like we're gonna shrink our portfolio. And I love how you said multifamily is so hard because these sellers are still living that 2021 dream.
Yep.
Think
Hold it
they're
on
still
tight.
yeah, they got that FOMO from watching all their friends sell their properties for like $1 million, over ask, right? And they're still hanging on. So and it's crazy because guys, if you are listening out here, you're trying to do multifamily, it is not a tomorrow thing. I think we've been looking for a deal for the last like 6 months,
Here you go.
and we've been sifting through tons of different properties, different asset classes, and dude, it's like the only way to make something work is if it was super creative or if you were to like you change the property and turn it into like assisted living or a co-living model. And it's like, and we're not familiar with that, right? That's not our skill set. So yeah, I love that you brought that up.
Well, another misconception too is multifamily is not for cash flow, guys. Like, especially if you're doing value add, the big payout is when you sell, right? So for us, it's essentially flipping, but it's in 5 to 7 years, right? So once you're trying to stabilize that asset, there's not much cash flow on that. So there's been a lot of people that I've come across that are like, oh, I want to get to multifamily, and then they fell off the face of the earth. They're like, well, I need money now. And I'm like, yeah, then you're in the wrong space. And that's why
Yeah.
for me, right, I've got a job and I get paid really well. So there's no rush for me. The reason why I want to actively be in real estate investing is because I don't trust that my 401k is going to support my lifestyle. And also, why do I want to retire when I'm 65 and only have 10 years to enjoy my life and then die? That sounds awful, right? I
Yes.
want to retire before 50 and give myself 20 years to enjoy my life, right? Like they said, the average lifespan's like, I don't know, 75, 80. And then you're too old and your bones hurt and you got like sickness.
I know.
That's not the life I want. That's not what I want at
I
all.
know. What's absolutely crazy, right? So when I first started, like I don't recommend this to anybody, but I was a crazy man. I was 31 at the time and I didn't have money to like do my first deal. Well, it was all trapped in a 401k. And this was
There's things
before.
you can do, right? We'll talk about that later.
Yes, yes, we're going to talk about that because you're going to avoid what I did 3 years ago.
Yep.
So I had no experience. I had no idea what to do. The only money that I had was in my 401k. So I literally liquefied it. Like I just did they called it a like emergency withdrawal.
Okay.
And I said like, oh, the reason why I need to draw is because I have all these mortgages and I'm going to go upside down if I don't take it. So they actually approved it and I had all my money pulled out. But now, like, okay, I pulled out my 401k. Like, what do I do with it, right? So, but yeah, so let's talk about that. So, if I was, if an investor was like me 2.5 years ago and was like, hey, I only have my 401k, what would you do?
Yeah. So it is not common knowledge that you can invest your 401k funds into real estate, right? Because JP Morgan, Wells Fargo, their products are the stock market. So there is a product out there called a self-directed IRA. It's a different custodian, right? So like I use directed IRA, Matt Sorensen's company. I had him on my webinar for Leapfrog Funds. He's a really cool guy. I can introduce you. But
Yeah, I
I
love that.
rolled over, I rolled over a bunch of money into that. And then that's how I funded two of the funds I put money into, right? And so, I didn't have to liquidate it, right? And then the goal is, right, to potentially convert that to a Roth and continue to invest it. And I mean, just the goal is to like be doubling this money, right, 3 to 5 years. And so when I do retire, like fully retire, like 65, like that's going to be multi-millions, right?
Yes,
But you don't have to only invest in stocks. So I wish I knew that earlier in my life.
I know. I mean, no one really educates us about that. And the big thing is too, like, if you transfer your 401k or your Roth IRA to a self-directed, you could really buy whatever you want. You could
Great,
buy
exactly.
crypto, you could buy, you know,
Business.
businesses, right? It's a crazy vehicle that you don't have to, wait for the S&P 500 to, grow your money. You know what I mean? So, okay.
And, I mean, I work for Apple, so a lot of my compensation is Apple stock. So thank you, right? I've got 401k and all that stuff. But now I feel like the growth of my wealth is going to skyrocket, right? Because I'm adding these other asset classes, right? I do want to buy a business eventually, and as many, you know, commercial multifamily assets as possible, right? So you need to diversify in that sense, not just put your money in Apple and then Facebook and then, Amazon, not that type of diversification, right?
Hey, don't hate on the Fang, man.
No, I'm not. I'm part of Fang. Come on.
Yeah. Yeah, you can't hate on Fang, right? But okay, so obviously you're raising capital. Are you an investor? So have you ever done like the connecting method? So I've talked to other investors and they say, hey, I'm raising $1 million and I'm going to go find a deal. I'm going to park that $1 million and then you end up getting some equity out of it. Have you ever done something like that?
No. So I raise for our fund solely, right? So, and I'm a GP of the fund. I feel like I'm going to get in trouble to say this, but getting paid for a connection is a little dicey for me, especially if you're
Yeah.
just like introducing a name. Like, I don't think you deserve 1% of whatever, right?
Yeah.
There's still some liability in that, right? So I only raise for our projects. So I keep it
Okay.
very clean and kosher that way.
I do like that, right? I do like that model. I only raise for our own deals as well. I've never thought about doing the connecting thing. My partner was like, "Well, you can raise capital. Like, why don't we just connect funds?" And I don't want the fulfillment out of it.
Yeah.
Like, if I connect the deal and I get paid or whatever it is, like, I'm kind of still connected in a way after, like, years after. If things go south, like, they're gonna blame me, dude. Like, I don't want to get blamed for it. So yeah, we're kind of like in that debate right now and to see if we were going to do something like that. But for me, if I were to vote, probably a no for me as well. So
Yeah, I mean, so the only other way that could possibly work is like a fund of funds, right? So, like, we're a main fund. If somebody who's just starting in real estate investing has connections with high net worth people, but doesn't have a team of operators and asset managers, like, you can bring money to us and be a fund of funds, right? So, that's usually like an easy way to get into this, but it's tough to do it all yourself, right? So, like, that's why thankfully I've got partners who are experienced operators, and I lean on them for those strengths. And then they lean on me for my sales, and then we team up together, right? But if you don't have all those people around you, it's really hard to do.
No, that makes a lot of sense. Can you explain to the listeners what a fund of funds is?
Yeah, so Leapfrog Funds is the main fund. So meaning like we buy the asset, we raise the money for it, we manage it, we're going to do everything, right? So, but let's say you, Tim, like you don't have a team, but you work for Facebook and all your buddies make, 500K or more and have hundreds of $1,000s in their, Roth IRA or, directed IRA type of thing. You can start your own fund, take money from them and then invest into our fund. But as a fund of funds, you're still a LP, limited partner into the main fund. We would still be the general partner. So general partners meaning we call the shots, we're the operators. Limited
Yes,
partners, you're the capital partner.
I love that. And then for all you guys and girls out there listening, the GPLP thing, like when you're going into these bigger deals, especially like syndication style things, the GPs have a fraction of the pie essentially, right? Because you guys probably have like a 30/70 or
75/25, I think we're doing. Yeah.
okay.
So
So
25
yeah, the
GPs, 75.
GPs got it. Cool. Yeah. So like imagine the property is a pie. Brenda's team gets 25% of that, and then the investors share the 75%, right? So that makes it like sexy for the investors. They get to park their cash, get some tax depreciation as well, which is really good for some of these high net worth individuals where they just literally don't have the time to find the deal. So that's like the kind of the perks of working with someone like her.
Yeah, and that's like the thing. I'm not good at explaining it, so you might have to do it. But like the whole concept of depreciation, again, why didn't I not know this earlier? Right? It's like you can do accelerated depreciation and essentially almost pay zero taxes on that, investment income. You can't do that with stock. You always have to pay capital gains. Like it should be a no-brainer to invest in real estate, like just based off of that. Like insane,
Oh yeah.
insane to
Oh
me.
yeah. Yeah, yeah. It's like, you know, all the gurus, all the internet people, like, we're part of the problem too. Well, not part of the problem, but we post stuff about taxes, right? And it's like, I try to tell people, I was telling my coworkers the other day, because I also work at W2, and they're like, man, you do all these like flips and stuff. Like, have you paid taxes? And I was like, no, I literally have not paid taxes in 2 years. And they are literally mind blown that I own properties, making money off properties, and not paying a single dime of taxes legally,
Right,
guys.
exactly. Yeah,
Right.
yeah. The
So,
tax code is written for these type of people, literally for these type of people. So why can't we do the same, right? Like they're not that far away from us. You just need to learn.
yeah, what's crazy about like you guys, like the multifamily space is like when you guys accelerate your depreciation, it's not like a single family where like I'm getting like $30,000, $40,000 depreciation. It's like hundreds of thousands of dollars shared amongst the investors.
Oh yeah.
So
I
you
mean,
can really do some damage.
so I got my K1 on one of my funds and they depreciated almost half of my investment. So because I'm not an active investor, right? Like I can't realize it all in one year, it gets spread out.
Mhm.
But almost half of my investment, that's a lot of money, right? So just imagine like the more money you put in, it's insane.
Yeah, that's crazy. That's so crazy. Okay, so obviously we're talking about a lot of high level stuff. We're talking about syndications, all that fund of funds and managing a fund. If you were to if you were a new person trying to get started, do you recommend people doing what I did in the single family route? Or do you think you think it's possible to get into the multifamily space as a rookie?
Possible. I hate to say that it's not possible. I think it's all about education, who's around you, right? So I think I'm very lucky that once the idea was planted in my head for capital raising in multifamily, I was able to find partners 3 months later through my own real estate investing group at one of my meetups, right? If I had never met those two people, I probably would have gone down the route of fund of funds because I don't know how to operate multifamily. I've never done that before in my life, right? But I know I can raise money. I've been in sales my whole entire life. So that's probably the route I would have gone. But again, like 18 years of sales, that's almost 2 decades of a skill set, right? So I wouldn't recommend jumping into capital raising if you are a shy desk person that doesn't want to be on the internet, right? Who doesn't want to pick up the phone, like that's daunting for most of those type of people. But, like the reason why most people get into single family is because it is easier. Again, nothing is, get rich quick. Nothing is overnight. Handling one house and the one house's problems is easier in the sense of this ginormous building and all the other things that happens with it. Like multifamily, you really do need a team.
I agree. I mean, I looked at the due diligence checklist for multifamily, like when we're underwriting these things. And all I can say is thank God that I'm not the underwriter. I am a sales guy as well. I stick to like talking to the brokers, sellers, and investors. So, for you, I want you to do me a favor. Sell me your pitch.
So your pitch, oh shit.
I'm an investor.
Make you an investor. Yeah, great. Now I'm on the spot. I mean, my spiel is, hey, I'm a high W-2 person as well, right? So the thing with sales is you need to find a commonality. So
Yeah.
I'm not going to be pitching to CEOs because what am I going to talk about, right? I'm going to talk to people just like me, and I'm going to share my story. I was looking to, offset taxes. I live in California. I work for, a FANG company, and I make a lot of money on paper, but I don't take home a lot, right? And, I'm married, I have a kid, I don't have time. Like, what else can I do to make money? Because the reality is your 401k is not going to support you. Honestly, Social Security is not going to support you. I do not come from a rich family. I'm not going to get an inheritance when my parents die. If anything, I'm already supporting one of them monthly, right? So like my expenses are high every month. So like, what else can I do that I can do while I have a job and have a family to make more income is investing passively into real estate and into other people's deals, right? Then I don't have to do the flip. I don't have to call brokers. I don't have to call a maintenance person, right? Like that's all sounds awful, right? But I can get dividends, distributions quarterly. And then once the property gets sold, 5 to 7 years down the line, you get a big chunk. Maybe you keep the money and do something with it, or maybe you 1031 it into the next deal, right? But like, again, I'm not a math person, but the returns are going to be much larger than just waiting for the S&P to appreciate the next 20 years, right? Again, I want to retire before 10 years, not when I'm 65.
Yeah, and the thing is too, like, even if the returns are the same, right, which they're not, like, because sometimes the stock market can go up 20%.
Oh, yeah.
And, but think about it this way, guys. Like, okay, so let's say the S&P 500 goes up 5 or 20%, and Brenda's cash on cash is 20%. Remember, you pay tax on the stocks.
Yep.
You're not counting the depreciation. So really, like, when you do the math, it's like having the property is still higher.
That's the secret. Yeah. And then I heard this, I forgot what it was. I have terrible memory. But another reason why real estate is such a good asset class to invest in is the building is not going anywhere. I mean, heaven forbid, like a fire, right? But companies can go out of business any day, right? And then what happens? Your money ain't worth shit.
Yeah, especially if it's stock compensation.
Right. But that real estate will only appreciate. Honestly, like everyone's talking about a recession. I haven't seen it.
Yeah, I haven't seen it either.
Like properties are only getting more expensive, which again is like, and then the salaries are not growing in proportion. So again, we're going to have a whole, Gen Z will never be able to afford a home, ever. So what are they going to try to do to make money to buy a home? They're getting side hustles. And hopefully they're learning, and this in our communities, there's so many like 20-year-olds, they're investing in real estate now.
Yeah, which is crazy. I bet me and you both are like, man, hindsight 2020, right? Like,
I wish.
In 2009, my friend was like, man, I should have just used my lunch money to buy some houses, right?
Yeah. When they're 7 years old, yeah, seriously.
Yeah,
but hey,
right?
I mean,
it's crazy. Hey, anything's possible.
Yeah, seriously.
So for raising capital, I know me and you have talked about this before. Me personally, I don't like raising capital from real estate investors, right?
No.
What's your take on that?
Same. Well, because they have the same frame of reference. Again, my investor avatar are high W-2 earners. They're working class people. They're accredited, right? So like if we want to explain accredited investor, if you're single, you're making at least 200K the last 2 years. If you're married, you've been making at least 300K the last 2 years, right? So you've got the ability to invest 50 to 100K into an asset class and not worry about it for the next 5 to 7 years, right? We do not want people who are going to be like, oh my God, it's my last 50K and then like, I'm going to be homeless without it, right? Like we're looking for people who are high net worth, looking to diversify, but looking to, what's the word? Like speed up, the growth of their portfolio. So, but not to say you can't invest or raise from real estate investors, but they're trying to get money from you too,
Yes.
and probably trying to get money for their own deal, but they understand, the mechanics behind it.
Yeah, so their returns are always going to be a lot higher. I think we were talking about going to like business startup meetups or tech startup meetups, and I want to tell you the different type of demographic that I encountered, and I kind of want you to share your experience too. But I literally was having lunch with somebody that dropped $2 million on an energy drink company with no guarantee of return.
Yeah.
Yeah, those are the type of people you want to be around.
100%. Exactly. Yeah. You don't want to be taking money from people that it's going to break their back, right? I went to a health and wellness meetup, right? And it was a women's only event. I was the only person there from real estate. And I had met 3 doctors who were ready to retire. And they're like, oh, I would love to do that. That sounds interesting. How easy is that? Then you're at a real estate event and you say, oh, I'm trying to raise money for, oh, me too. Oh, well, fuck off. I got to go find somebody else, right? Like,
Or my favorite, I'm a lender, and I'm like, okay, like, what's your return? To like 14%.
right, right, exactly. So yeah,
Jeez.
now you need to go outside of the real estate realm if you're going to raise capital. 100%.
Yeah, there are so many different types of ways, right? There's obviously the free way where you just, go on like a meetup.com, whatever, and go find something different. And as you start making money, it's like anything else. You start with free and then you go to paid, right? I'm sure Brenda does a lot of masterminds as well, where you invest in, what's it, the S&P Me, where you go invest in yourself. And that's super important too, because the type of connections you meet, like I think I met you at community camp, so there's a lot of different people that you meet at these, larger, more paid events, right?
Absolutely.
But yeah, so no, I appreciate you sharing all that stuff.
Of course. Absolutely.
So this is the time of the show where we kind of want to like highlight you. Don't worry, it's nothing sketchy. But we want to highlight you. So like let us know, let the audience know what you're looking for and then where they can ultimately find you.
Yeah. So the best way to get in contact with me is Instagram. So Brenda Rose Invests. I'm also on Facebook, TikTok, LinkedIn, and YouTube as well. But Instagram's my main platform. I am the fund manager for Leapfrog Funds. So if you are an accredited investor looking to invest in multifamily RV parks or boutique hotels, let me know. Hit me up. We are looking for deals. So right now, like I said, RV parks is kind of what we're putting our energy into. We've got about 6 LOIs out, so we should be getting something under contract pretty soon. So very excited. So my hardcore capital raising will be starting soon. And yeah, if you're in Orange County, we've got a meetup that we meet up every month. Next month, we've got the CEO and the COO of Pad Split coming. So, it's exciting. But yeah.
Dude, that's really cool actually. Are
Very
they
exciting.
are they out in Cali?
I don't know, but one of my leaders set that up and, we got a new venue in Irvine and we're really excited about it. Everyone thought it was Mandisa. I'm like, no, we've got the actual CEO and COO. So it should be very exciting.
Okay.
Yeah.
That's sick.
Yeah.
Okay, cool. Well, dude, thank you so much. I'm going to have all that information down in the description. If you're interested in raising capital or investing in her projects, be sure to connect with Brenda. She's been absolutely dope. I mean, I learned a lot today as well. So I appreciate you coming on the show today.
Of course. And we need to hang out soon.
Yeah, for sure.